All right, thank you, and good morning, everyone. I'm going to be starting off by just giving a quick overview of the collections process. The collections process is varied depending on the situations, the type of tax, the taxpayer circumstance, and so it has to be just a brief overview. We can't get into the details of every possible scenario, but these are some of the enforcement areas we'll be discussing today. Collection agencies and offsets, pay plans, liens. These are the most common questions that we get from taxpayers and tax practitioners. So we'll go ahead and begin with just an overview of the collections process. There are two paths that taxpayers can end up in our collections division here at the Department of Revenue. The most common one is taxpayers with a balance due. Balance dues don't come to collections until they've been fully assessed and any protest periods or opportunities for taxpayers to make those corrections have been completed. And so by the time it comes to collections, that assessment is considered finalized, and we begin our collections process. Prior to coming to collections, the taxpayer will receive a bill or a letter outlining those protest timeframes, and generally after the protest is over, they'll receive a bill or what they call a final notice. That final notice will give a deadline, and after that deadline is reached, the case is then transferred to our collections division to try to pursue and collect on that debt. At that time, a collection fee is assessed. That fee depends on the balance. It can be as low as $30, as much as $100. Additional fee once it comes into collections, and that's a fee assessed per tax period and bill item, not just one fee if there's multiple periods involved. One important note, especially for taxpayers and tax practitioners, once they receive that bill and see that deadline, you may respond by requesting a payment plan, or you may respond by sending correspondence in, and those items will be reviewed. However, those items don't extend the deadline to pay or to resolve that balance before it comes to collections. So once those items are reviewed, it will come to collections immediately after that deadline. It doesn't extend or give you another waiting period before collections resume. So it is important, once you get those notices, those bills with those deadlines, that you respond to the department right away. You don't put things off, and you make sure that you get those resolved. The second thing that collections enforces is unfiled returns. Certain tax types in Illinois, like withholding income tax, sales tax, things like that, have a filing requirement. You are required to file even if there's no activity. So if you have a business and you haven't opened, you haven't made any sales, but you have registered, you are required to file your sales tax returns monthly or yearly, whatever your frequency is. You need to file those even if it's zero. And if not, the department will pursue those unfiled returns as well. Once the deadline for a return hits, we wait, depending on whether it's an electronic return or paper return, a certain time frame before we begin collecting on it. Once it does come to collections, on the next slide, we'll see that collections always begins the same way. We send out what's called a notice before collection action. And this is our letter that outlines what collection potential we have, what options we have as a department to try and collect on the debt or the missing return. It outlines all those things, but it gives a taxpayer time to respond before we do any of those things. Generally, it could be as short as 35 days, as long as 120 days before we pursue an enforcement action. And during that time, we do make both automated and robotic calls, as well as manual calls out. We send additional letters letting the taxpayer know of our intent to take a specific action. And so we do everything we can to make sure the taxpayer has been informed and has opportunity to resolve the matter before we take any enforcement action. Examples of this enforcement, like I mentioned before, include outsourcing this to a third-party collection, bank and wage levies, revocation of licenses or certificates of a variety of types, assessing balances against owners of a business. Those and more are potential enforcement actions. And in each of these cases, again, we will send out an intent letter saying, this is what we plan to do if you can't resolve this. So again, once you receive communication, it's very important that you respond to the department. Next. Some of our enforcement, we tend to do one item at a time. So for example, once we place with a collection agency, we wouldn't also pursue a bank levy. We try to let one enforcement program work at a time, but we do have several that work concurrently. These are things that happen, as far as we're concerned, in the background and can happen pretty much at any time once a case has come to collections. but we don't have to necessarily hold a case for these actions. That includes things like liens and revocation of your, revocation holds, or sorry, license holds on licenses such as liquor licenses, lottery licenses, certificate of registration, offsets from various sources where we would hold the money that would be sent to the taxpayer and instead use it to pay down the debt. These things can, again, happen at any time, and including while other actions are taking place. So we'll take a little bit of a deeper look at a few of our enforcement programs. So starting with our outside collection agencies, so you'll hear me refer to OCAs. At the top there, you see a list of the OCAs that we have contract with right now. And it's important to keep in mind that we do have a contract with these agencies to collect and take enforcement on the debt. This is different than what you might think of with a credit card or a medical facility that sells the debt. The Department of Revenue does not sell the debt. These collection agencies don't own it. They simply are making phone calls, sending letters, attempting to locate and communicate with the taxpayer and then collect on the debt. Because they do that extra work, in order to support that extra work, they do, by contract, assess a fee directly to the taxpayer that's added on to the debt of the state of Illinois. The state does not receive that fee, and the collection agency only receives that fee. Any other money paid goes towards the debt with the Department of Revenue. Because of that contract and the way that's set up, we have to let the collection agencies, during their time of working the debt, we have to let them receive payment and receive their fee. So we can't accept any payment plan requests at the department when it is actively placed with a collection agency. The collection agency would be the one that sets up any payment arrangements. So you can contact them and set up a pay plan, but it has to be with the collection agency. Another point to keep in mind, and it's not on the slide there, but because we are contractually obligated once we place the debt with the collection agency to allow them to collect their fee, if you try to circumvent that by paying the department directly, we will accept your payment, but we will withhold the fee that's owed to the collection agency and send it to them. And it really just slows down the process of getting your payment applied. So it is important, if the case has been transferred to a collection agency, you allow the collection agency to be the one to collect it, contact them for payment options and arrangements. And as I said before, while it's with a collection agency, liens, offsets, license holds, those all may still occur while it's with the collection agency. Those items would be handled by the department, not the collection agency. Next. And so if you have a question or a complaint about the collection agency themselves, if you want to inquire about any of the tax returns or any of the tax side of it, the cause of the debt or the reason for the debt, or any of the other enforcement things like liens, you would want to contact the Department of Revenue at the number listed there. The collection agencies are there to collect the funds. They don't know anything about why the funds are owed, just that the department said they were owed. So if you have any questions about the why or how to resolve that portion of it, you need to call us. But as far as making payment or setting up payment plans, you would contact the agency that the debt's been placed with, and that should be on the correspondence that they send you. Next. So offsets, the term offset we use to refer to situations where funds are available or credits are available to you from another source, and instead of giving you credit for it at that source, sending a payment, we use that to pay down the debt you owe at the Department of Revenue. The two most common types of offsets you'll see are with the U.S. Treasury and the Illinois Comptroller. It's important to recognize, and we hear this every year, that a taxpayer will tell us that their preparer told them that we would just take their federal refund. They didn't have to pay the state debt that they owed. They didn't have to pay their tax, that we just take it out of their refund. Unfortunately, this causes a lot of problems for the taxpayer, a lot of confusion, and it costs them extra money. So please, please, please do not view an offset of a federal or a state refund as a payment option. This isn't a collection enforcement action, and it is a negative for the taxpayer to have it go this way. Both the Illinois Treasurer and the U.S. Treasurer and the Illinois Comptroller charge a fee to the taxpayer when they perform an offset. In addition, the Illinois Comptroller will hold those funds for 60 days to allow the taxpayer to protest. During that time, their debt remains completely collectible. Similarly, the U.S. Treasurer doesn't have a holding period, but they don't notify the Department of Revenue when they're holding anything until the funds arrive. Usually the taxpayer knows several weeks before we do that their funds have been held. And so because of this, enforcement action continues. we might continue to file lien or levy a bank account while we're waiting for those funds. So again, taxpayers thought that it was the right thing to do to wait, but it ends up harming them. So please, 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 if the taxpayer owes a balance, do not encourage them to let it come out of their federal or state refund. Next. So as with the OCAs, it's important to know who you need to contact. Any questions or issues with state offsets from the Illinois Comptroller regarding the taxes that caused the debt to be owed, wanting to protest the offset, wanting to stop future offsets, you would call our Illinois Department of Revenue Comptroller Offset Unit. They handle the state offsets specifically. If it is a federal offset, for similar questions, you want to know why the debt was owed or how to stop future offsets from occurring, you would contact our main collection line. And if you have a question about a refund check, a check from a tax refund from the state of Illinois, or any other state payment that was issued that you didn't receive, that you need a replacement check, or maybe was sent to another agency, the Department of Revenue doesn't have that information. You need to call the Illinois Comptroller directly. That includes Illinois state tax refund checks that were sent to another state agency. We don't know where those go. Once we issue a refund, the comptroller takes care of it from there. And so all we know is we send it to them, but where it goes after that, you need to contact the comptroller. Thank you. Next. Obviously, pay plans are crucial for many taxpayers that can't afford to pay their full balance, and they need to break down that balance into monthly or weekly payments. And so we do welcome payment plans if that is the best situation for the taxpayer in the state of Illinois. It does need to be approved in most cases by the Department of Revenue to make sure that it is in the best interest of the state, and it is the way that the taxpayer is going to be resolving the balance the quickest. Keep in mind that certain times pay plans are not allowed. For example, when placed with an outside collection agency, if a case is in bankruptcy, by law, we cannot set up a pay plan. Taxpayers are welcome to make voluntary payments, but we can't officially set up that plan. And we don't accept pay plans once a wage levy has been actively engaged with an employer. It's also important to note that requesting a payment plan or even being given a payment plan will not stop all collection activity. So it's important that you talk with the Department of Revenue about your specific case to know what is or is not going to happen. Most specifically, taxpayers will get on a payment plan, and then a few months later, they end up with a bank levy, and they're confused. And often what happened was that they were on a payment plan for some debt, but then they did not pay their next tax return. Incurring additional debt or failing to file a tax return will default and close out your payment plan. So part of that agreement to get on a payment plan is that you will continue to file and pay current debt on time and not fall further into delinquency. So do keep that in mind when you get on a payment plan, and the amount that you or your client are trying to propose, that amount needs to consider paying all of your current taxes on time as well. Next. So we have a few options for how to request a payment plan, and we're excited to announce last year we rolled out a pre-approved payment plan, exactly what it says. This one does not require an agent or an IDOR representative to review and approve. Our system will evaluate your case, and if you're eligible, you are already approved, you simply need to agree to it, and the payment plan will be set up. You don't need a login or any account to do this. This is a non-login option on our MyTax Illinois homepage at mytax.illinois.gov. You will need your collection case number. You have to have an open and active collection case. And if your case meets the guidelines, it will allow you to select a number of payment options. The first payment will have to be made within 15 days, but you can select the date. And once you do that, the payment, you submit it, the payment plan is approved, it's set up, it's immediate, and it will pull it from any collection enforcement program and hold it until the payment plan is completed, or if unfortunately the payment plan defaults. The benefit to this is also that you can use this method to make a full payment in full, even if you don't have a login. So if you have a taxpayer who's trying to pay their debt and they just want an online way to pay it, they can use this. They just simply go in as if they're setting up a payment plan and choose one payment, and that will just pay the balance in full. So this is, again, the best way, the fastest way to get on a payment plan. The second option, if the payment arrangement options that are presented in the pre-approved, or if you're not pre-approved at all, you can go into a MyTax account, log in. This does require a login. And then on the More tab, you select the Payments and Returns panel, and you can request a payment plan through your MyTax account. This one will be reviewed by IDOR staff before it can be approved. It will default your payment to pay this off in 1 year, but that's not fixed. If you need to change the amount that you're going to pay monthly or weekly, you can do that, but just know that it will default to paying it 1 year, which is our preference. And it may require additional information or a down payment. If those are required, the department will reach out to you and let you know what's needed. And then the third option for requesting a payment plan is to send in a paper form. That's on the next slide. The paper form CPP1 is what we've been using for years. You can mail it, you can email it, you can fax it. The emailing is the fastest. Like the MyTax login, it does require approval. There may be additional information we need from you, and we will request that. If you read the instructions, you'll see that there's a supplemental form called the EG13, either I for individuals or B for business. If your debt is over $15,000, that is going to be required, so you might as well send that in with your CPP1 rather than waiting for us to request it. Next. Another common question we get a lot, it has to do with liens, and liens are very specific to each case, and so it's hard to give a detailed outline of what you need to know about liens other than the contact information for the lien department. They can explain what the lien is and how it, what it applies to. Liens don't always equate to the entire balance, and so they can break down what is owed and what is liened and how to get those released. It's very, very important that you get the payoff amount for your lien from the IDOR lien unit rather than just looking at the statement because, like I said, some liens are including less periods than the balance. Some of them include additional debt, and so you need to make sure you get that lien payoff amount. The other thing that's important, and they'll tell you when you call, is that if you need an immediate release of a lien, it needs to be paid with what's called guaranteed remittance. If you pay by credit card, personal check, those sorts of things, there will be a holding period before the lien gets released to prevent any payments from being reversed. We did a few years ago implement a lien registry so that instead of filing liens with each county, we file them directly with ourselves, and we publish those through a lien registry available on our website. There's no additional lien filing fees to file or release, which is a benefit to the taxpayer. Previously, we would be charged by the counties, and that fee was passed along to the taxpayers, but no longer. So that information is there, so if the taxpayer wants to check the status of their lien, they can go look it up in the lien registry. Others may have a desire to have this public information, and so there is a method to subscribe to the lien registry to get this public data. We do warn that this is not property tax sales data or property tax liens. You're not buying any debt. You're not able to use this debt to acquire any property. This is simply informational of public records of the tax liens that we filed. Next. The last program we're going to talk about is the Certificate of Registration Revocation. Businesses are required to have a certificate of registration in order to operate and make sales in the state of Illinois. If taxpayers are not in compliance and fail to come into compliance after we've tried to work with them, we can take them to an administrative law judge and have their certificate revoked. There are a few options taxpayers have. You can skip the hearing, and if you do, the revocation will be a default awarded to the department. We will revoke that license. You can participate in the hearing and make your case and let the judge make that determination. And what's very common is something called a consent order or a 45-day stay, in which the taxpayer simply asks for 45 more days to come into compliance. And if that's granted, then in that 45 days, the taxpayer can try to pay the balance in full or get on an approved payment plan. And once they do that, their certificate will be renewed. If not, then it will be revoked. We do encourage you to contact the department for more information about that in your particular case, whether or not a 45-day stay would be granted and how all that works. So please do contact the department for that. Next. So, and I apologize, there's a heading on this slide is incorrect, but this is about communicating with the department. As you've kind of heard me say several times, it's so important that you communicate with the department, specifically with collections. There are a lot of issues that people feel like they need to protest or they need to appeal with the administrative hearings with the Board of Appeals, but a lot of those issues could actually just be resolved by contacting collections. It's a less in-depth process, less complicated process if you just contact us first. So we do strongly encourage when you start getting these letters, don't feel like you always need an attorney or anything like that. You can contact us directly. We can try to guide you to how to resolve it. And then if that is not going to satisfy the situation, you certainly have those other options. but we do encourage you to contact us as soon as you get a letter or an alert on your MyTax account. Obviously, calling us is the best because we can get that back and forth. We can really get into detail, but obviously email is also fast. If you can't reach us during regular business hours, we do still accept fax and mail. And keep in mind that the department will contact taxpayers by mail, phone, email, and in some cases in-person visits from a collector to a business. Obviously, if it's got to that point, it's pretty bad. So do try to resolve this with us before we have to get in touch with you in those ways. And so the next two slides, I'll have some of our contact information for our collections units. So we'll just kind of let these sit for a second. We'll switch these slides. And again, I do encourage you to contact us if you have any questions. Contact me or any of these units. And I thank you for your time.